So on this channel, we've talked a lot about auto insurance, how the rate increases have gone up and how the rate increases are going to decrease a little bit and how there's going to be all the lawsuits and all the things, right? So there's a ton of auto talk. But one of the main pieces that a lot of people aren't understanding is that it's not just car insurance. Home insurance has actually been one of, or if not the largest issue for all of these insurance companies. If we look at states like Florida and California, it's one of the reasons that they're raising all the prices, all of the denials of policies. Some companies left the state. There's 7 or 8 of them have gone bankrupt or insolvent, as they call it. And the home is the main issue. Yes, the car insurance has gone up and it's increased in 20-30+% over the last couple of years. But let's look at the numbers for home insurance and go over what has changed and what your options are to try to combat or fix that issue. Now, this actually spurred from an article that's fairly accurate. Actually, in my opinion, a lot of this stuff is pretty normal in what I see every day, which is it's from the Insurance Business Mag. And most of the statistics that they're quoting is from a company called Guaranteed Rate Insurance LLC. There's a report that they put out from 2022 to 2023. They're saying that the average increase of premium on your home insurance from 2022 to 2023 is over 18%. But they go back to say from 2019, which is honestly 2020-ish to 2019 to 2020, that was the year that all of this insurance issues spurred, a lot more claims, and we'll go over it in more depth on it. Overall, it's increased approximately 55.47% since 2019 going into 2025 and part of 2024. Now, I've actually personally seen this happen, so I can combat that this is actually very common. You're seeing 20 to 40, sometimes 50. I have a few policies that are 150% increase with no changes. It's just the risk, the zones, there's a lot that's happening. Let's go in and explain the scenario of what caused this and what some of the pain that these companies are feeling that's forcing them to raise the rates the way that they are. If we look back at, we're gonna ignore the main states because we've got Florida and California. We know what's happening there. I've got a video on this channel if you wanna check it out that goes over why Florida's having so many problems. There's just a lot of hurricanes happening, more than predicted, why California's having issues. They don't allow predictive models in a lot of the insurance companies, or at least they used to not allow it, so they couldn't predict it correctly. And there was a lot of wildfires, a lot more happening besides those, but those are the main 2 issues. Texas, unfortunately, does have to fall in this category because they're a very common state that shouldn't have a lot of weather disasters, but they've had freezing rain like crazy. They've had floods that they shouldn't have had, which fell into North Carolina, fell into Georgia, fell into a lot of states that it normally wouldn't hit. And there's a lot of states that aren't prepared for the scenarios that are happening. Now, that's going to affect most of the homes. The bigger piece, let's say states like Michigan. Michigan's average home is over 60 years old. So that means that these homes are hitting ages that should have more repairs done. We all know where the economy has gone and we all know where inflation has gone. So the price of everything has gone up. The income of people has not followed as much with some areas. There's a lot more layoffs, the unemployment rates are higher, all of the economy in general, there's not as much money to repair the house and the maintenance to do that. I kind of fall in the category of not wanting to do the work. That's where I get a little bit lazy. I don't do the lawn as often as I should. I don't fix the siding as much as I should. All of the maintenance of a home, it's almost gotten to be where there's so much going on that sometimes you just don't have time to do things. And the homes do tend to take some of the neglect in some areas. Now, don't get me wrong. I've got every other friend who takes care of their house. They wash the lawn. I want lawns like my friends have it. I want the house to look like theirs and it to be spot clean. If I was in the right location and we had many people that didn't do that and there were a lot of issues with their homes. Now, I take care of my home enough to where there aren't any major claims. I don't have to file claims. I'm not, neglecting a pipe that's about to burst. Water heater's been replaced. All of the things that make the house solid and stable are good. If in some areas where they can't afford to do things like that, or the scenarios happen more often, then those location or those zones are going to hit harder than the ones that aren't. So if you have a nice home in a not so great neighborhood, you're going to pay more for insurance because the odds of that location, that zip code, are going to increase. Additionally, in 2021, the average cost of house insurance was right around $1,200 to $1,300. I can actually agree with that. That's around what I paid, and I'm now paying closer to 24 to 2,500. Mine has over doubled increased from what it was in the previous time. And again, no claims, nothing that would tell the insurance that I'm any worse of a risk. And there's just increase after increase, claim after claim in the zones that just creates that waterfall effect that creates those price increases. The unfortunate part about insurance is they're usually a few months behind all of the prices. Now, they're quick to try to file rate increases because when they file a rate increase, they have to do it months in advance. In some states, you have to do it over 6 months in advance before you file one. So when you're thinking, why should I raise this rate? They're also thinking, what's going to happen in those next 6 months? Is there going to be another impact? That's where they have what's called a predictive model, where they can essentially put in a zone or a risk area, and it knows the average claim, knows all the things that we just talked about, but also the cost of material, the average claim, the average time and delay, the cost of your living expenses, because your policy doesn't just cover a couple things. It's covering you to live somewhere else while the house is being rebuilt. It's covering the liability risk if you have a dog and it bites someone. Things like that are pieces that they have to include in the premium. There has been a larger cost of material. So the 2x4 to build the house used to cost, let's say, $2 before. Now it's $3.50. That general increase is going to be what we call inflation. Now, when they say inflation, I would say honestly 90% or at least 80% of the time when your home rate has gone up, a lot of it has to do with the inflation. There's an easy way for you to understand and check where that is. If you look at your policy, you'll see something called dwelling coverage A. And that coverage A is, in the simple form, your home. It's essentially the walls, the inside, the interior, all of the physical structure of your home. And then you've got B and C, and there's other pieces. I've got videos that go more in depth if you want to learn about that. But in general, that home policy is built off of that main part. If your dwelling A has gone or increased, that's inflation. That's the value of the material to rebuild your home has gone up. So what was $300,000 may show $320,000. That's just inflation catching up. Some companies rate homes differently, and that's where they all differ in prices. When one company looks at a home, they might say the cost to rebuild this house, we estimate is $300,000. Another company could look at it and say the cost to rebuild this house is only $280,000. So the cost of them, based on the product and their risk and their costs that they're charging, might be less expensive to rebuild the home. Just be careful. If one company isn't caught up with inflation, they don't understand the value of your home, and you don't have the right coverage, then you might be underinsuring your home if you go with the cheaper option. With auto, we talking about discounts and finding out if you're a member of this or a member of that. But house insurance doesn't move. It's not a product based on the person. Yes, your insurance score or your credit can help a little bit, and having additional people in the home usually doesn't change the risk, if at all. Sometimes a tiny bit if you have a lot of people in the home. But in general, the only thing that they're rating is the location, the weather claims and all the things that we talked about, and the risk that they have at that spot. So what companies have done is they've, instead of doing zip codes, they used to do zip code A, B, C, all of these zip codes were ranked into sections. What most states have done is they've revamped and done territories now, not by choice. A lot of these are actually done and forced these insurance companies to have to do what's called a territory. Now that territory takes these 5 or 6 or 10 zip codes and puts them into one area. So where one zip code, if it was really good, you got a really good price, was ranked really good there. There's a wall, maybe next to it is a really bad zip code. And it depends on the area that you live in. Now that we've taken these territories and we've got all of these zip codes, it averages the prices out better. Unfortunately, the people that were in a really good zip code now have a little bit of an increase. Sometimes a lot of bit of an increase. And that's why we talked about some people's policies have doubled without any changes. That's that territory taking effect. You're going to start to see more and more companies do that. Again, there's not really a great solution except for it to start shopping. If you have a local independent agent, they usually can check multiple companies in different locations. So if you have somebody that is independent and you trust them, go to them, find out if there's a way to check it. If you don't, I'll put a link in the description below where you can connect with an independent agent that can shop all the different companies. Again, you've got to be very careful on the coverage that you're giving up if you're changing the coverage. Not all agents are the up and up. That's why I say it's more important to find an agent that you trust than it is to find one that gets you a cheaper deal. It's not always about price, because when push comes to shove and that fire starts in the home, you want to make sure that you're covered correctly. I've got a video here that will go a lot further in depth on what coverages you should carry. Otherwise, this video will be very helpful as well. I'm Mark with Think Insurance. I'll see you in the next one.